Good evening to all. I am Dr.S.MANJULA, Assistant Professor in Commerce, Professional Accounting, G.Venkataswamy College, Autonomous, Kovilpatti. In this video, talk about third year students, Corporate Accounting. 1. Topic Valuation of Goodwill. Valuation of Goodwill, meaning goodwill is something which will bring to the firm in future profits almost without efforts. Goodwill is the reputation earned by a business. Goodwill is an intangible asset of a concern. It is an invisible. Next one, definition. An intangible asset arising from business connection or trade, name or reputation of an enterprise. Institute of Chartered Accountants. Next, methods of valuation of goodwill. Number 1, average profit method. Number 2, super profit method. Number 3, annuity method. Number 4, capitalization method. Number 1, average profit method. Average profit method is a certain number of years is calculated. Average profit is multiplied by the number of years of your purchases. Valuation of goodwill on the basis of average profit is called average profit method. Goodwill equal to average profit into number of years purchase. Average profit equal to total profit into number of years. Next one, super profit method. Super profit is multiplied by the number of years of purchases. Super profit is difference between average profit and normal profit of a concern. Goodwill equal to super profit into number of years purchase. Super profit equal to average profit minus normal profit. Normal profit equal to normal rate of return into capital employed. Next one, annuity method. Goodwill is calculated on the basis of reference to annuity table. Goodwill equal to super profit into reference to annuity table. Next one, capitalization method. The value of the business is determined by the capitalizing the expected average profit on the basis of normal rate of return. The value of goodwill is the difference between the value of the business and the actual capital employed. Capitalization method equal to average profit into normal rate of return into 100. The net profit of the business after provided taxation for the past 5 years. First year equal to 80,000, second year equal to 85,000, third year equal to 92,000, fourth year equal to 1,05,000, fifth year equal to 1,80,000. The capital employed of the business rupees equal to 8 lakhs. The normal rate of return is to be 10%. The 5 years purchase of super profit. The annuity of super profit method taking the present value of annuity of rupee 1 for 5 years at 10% as rupees 3.78. Prepare a valuation of goodwill. First one, average profit method. Average profit equal to total profits into number of years. Total profit 5,42,000 divided by 5, 1,08,400. Goodwill equal to average profit into number of years purchase. 1,08,400 average profit into 5, number of years purchase 5 equal to rupees 5,42,000. Next one, super profit method. Super profit equal to average profit minus normal profit. Normal profit equal to capital employed into normal rate of return. Capital employed amount 8 lakhs into normal rate of return percentage 10%, rupees 80,000. Super profit equal to average profit minus normal profit. Average profit 1,08,400 minus normal profit 80,000. Rupees 28,400. Goodwill equal to super profit into number of years purchase. Super profit amount 28,400 into number of years purchase 5. Rupees 1,42,000. Next, annuity method. Goodwill equal to super profit into reference to annuity table. Super profit 28,400 into reference to annuity table value 3.78 equal to rupees 1,07,352. Next one, capitalization method. Capitalization method. Goodwill equal to average profit into normal rate of return into 100. Average profit 1,08,400. Normal rate of return 10% into 100. Rupees 10,84,000. Thank you.